Hi everyone, hope all of you liked the previous video. Uh, Presently, we are going to come up with a new one. So I'm Dr. Hari here. We'll be talking about few practice management things in the channel. And like last time, I showed you how to calculate the feasibility of equipments when you purchase for a hospital in terms of your revenue model. So this time we will look at another aspect of the same thing. So So this time we are looking at something which is the pharmacy part. So just imagine a medical representative comes to your hospital and tells you, "Okay, sir, this is particular a tablet or an eye drop." And what I have always noticed is they promise you that if your sales margin in this would be around 20%, 30%. But actually, when the invoice comes to you at the time of supply and you sit and calculate, you realize that the real story is far away from the truth. So let's delve into the Excel sheet calculation. So here you can see one small Excel sheet. This Excel sheet, the green part which I mentioned here, it is this area is something that you will always find in an invoice issued by a pharma company. So here what is happening is, okay, let's take one drug whose the PTR. Okay, let me come to the legends first. PTR stands for the price to the retailer. PTS is price to the stockist, and there is GST. Then comes the MRP, and then any discount that you would be applying on your sale part. This is not the discount by the vendor. So here, if you see, if you look at the, let's take an example of an eye drop which costs you 100 rupees, and yeah, stock is as of now we keep it as 100 rupees, and the MRP is of 120, and you sell it at zero discount in this case for the first drug. So here the vendor, that is the medical representative or the pharma company, will promise you 20%, 20 rupees margin for the item. So it comes to a promised margin of 16.67 percentage. But however, the problem that we face is that this PTR and PTS is the figure which is excluding GST, and MRP is a figure which is including GST. So here what happens is you are actually comparing oranges with apples. You cannot do that. So uh, you cannot subtract two different kind of figures. So you are supposed to include the GST component of 12% into the PTR and PTS, and then calculate your actual margin. So when they promise you a margin of 16%, if you look at the actual margin, you will see it's coming to 8 rupees and it is just 6.67%. So just for an instance, 150 is the price that is landing for you, and the MRP of the item is 200 rupees. So in the outset, you will have a feeling that it looks like, okay, this is a 25% margin product, right? It's not. It's not. If with a zero discount, promise margin is around 50 rupees at a promise margin percentage of 25, but actual margin, if you look at it, is just 32 rupees, and that too with a 16%. So there's a huge disparity between these. Now, in branded products, reputable vendors, the margins are lesser. So we get to see that, a 100 rupee product with an MRP of 118. This is one actual product which I'm looking at, but I don't want to take the names. Its promise margin is 15%. The actual margin is working out to 5.08%. They might give you some schemes, offers, whatever, but anyway, whatever, whenever you receive the invoice, be sure to run this calculation once, so that it shouldn't happen that you are running your hospital and a pharmacy just for the sake of making some revenue for the manufacturer. You are supposed to earn for yourself. You need to have some margin. Any decent business establishment will have a margin of 10 to 15% minimum. Only on FMCG products like soaps and toothpaste, the margin is around 5%. But other products, generally the margins are higher. So we should be, compensated at market rates without any, we shouldn't be, there shouldn't be a need of thinking about it. It's if something doesn't, work right for your business, you should call an end to it. You should reassess in between how it is going. Did any price hike happen? Did any this thing happen? Now here there is another catch point which I like to tell you, that in case you have a pharmacy with a registered GST number, uh, you can claim the GST input tax on it. But however, in most cases, what hospitals do is they take a separate GST registration for the pharmacy. So, in because of this, they end up paying the GST rather than having a 0% GST. So, this calculation will work out for them too. So, you can contact me for those details on this calculation. So, that's it. Is a small snippet which I want to put it through. Thank you, and thank you for seeing this video.